Okay, recording this video on Sunday the 2nd of November 2025, just gone 11:59 a.m. Chicago time. Do hope you are doing well. So it's the weekend, time for another weekend futures market recap where I go through 15 of the largest futures markets and I show you what I'm seeing on my charts. Hope your trading is going well. Apologies from me, there was no video last weekend. For everybody that emailed, am I okay? Yes, I'm doing fine. Sorry to worry everybody. I was just in the UK and so pretty busy, wasn't able to get a video out. And today's video is out late, so apologies for that too. But on the plus side, for all the subscribers of the Better Indicators on TradingView, we now have an onboarding video sequence for you. So there are 7 videos there to go watch. Total, I think, of 50 minutes of video. They all come with PDF downloads with notes so you can follow along. And they cover pretty much soup to nuts, how to subscribe to the indicators, how to set up your charts, how to add the indicators to the charts, how to adjust the settings on the indicators, and then how to interpret entry signals, exit signals, and so on. So pretty comprehensive there. And we've broken it down into bite-sized chunks there with the 7 videos. So if you're subscribed to the Better Indicators on TradingView, just log into your WHOP account, WHOP.com, and you'll see a notification there and an onboarding course listed in the sidebar of your WHOP application. So there we go. Let us talk about some charts. We've got some interesting turning points happening. A bunch of setups on the tip bar charts. We're going to go through those. Emini first. So yes, we're in an uptrend. Background's in red. In terms of price and volume on the higher time frame charts, we are in an uptrend. But we have reached an end of trend signal, and we were looking for this over the last couple of weeks. So we've broken above resistance on the lowest time frame here, and we put in this pullback to end of trend. So we got an end of trend on the lowest time. It is syncing up with a resistance on the highest time frame. That's always interesting for a turning point. We'd like to see it with more confirmation on the volume side of things, blue professional up bars, exhaustion buy patterns, all of those things, but we've not got that. So all we're going to see potentially from this is a little bit of a technical weakness. End of trends don't mean a reversal into a downtrend. It just means a pause. We could see a reversal, but normally what happens if the market is strong, that we just have a little bit of flattening out in the market. It's the last time we had pullback to end of trend until we resume the uptrend. And I'm saying that because we haven't had anything on the volume side of the picture to say that we're exhausted. We don't have exhaustion buy or bearish divergence. We don't have blue professional up bars or even amateur bars at this point. So all it suggests is that we're going to have some weakness until we resume the uptrend. And to resume that uptrend, we're probably going to see a little bit of weakness into blue professional bars on the lowest time frame. So let's go down to those. 135-minute chart here. Similarly to this, we have blue professional bars catch on that little bit of weakness from there, from Rambo patterns to blue professional bars, Rambo patterns to blue professional bars. Momentum-wise, we're just at 0 here. Are we going to have a little bit of sell-off till we see blue professional bars step in again? There's our pullback to end of trend. It's on the intermediate time frame on the 135-minute chart. But the trailing stop here is miles away, so we're not breaking into a downtrend on these highest time frame charts. 45-minute chart, there we go, pullback to end of trends come in. We've got a pullback support that we've got to play out here. These bars have not turned white, they're still red, and the background is still red on Better Pro-Am over here. There's all the blue professional bars that came in on the last bit of weakness that we had, and all we've done, we've run up to exhaustion buy. Yes, one little Rambo pattern into those highs, but exhaustion buy, we've not put in bearish divergence there. So again, on the 45-minute chart, we've got to find some weakness, test back up. Blue professional up bars is what we're looking for in terms of taking profits in the end of this uptrend. So even on this highest time frame, we've not done that yet. 15-minute chart, a little bit different. So here we had a signal 2 or 3 weeks ago into an uptrend. The sell-offs that we had, exhaustion sells, and we bounced from there. So those are nice little patterns. And we've now run exhaustion sell into exhaustion buy. So here we go, exhaustion buy, bearish divergence, blue professional bars come in. We trailed the stop, we've broken into a downtrend. Background's in grey. We've had a sign of weakness signal come in here with the arrow down. Similarly on better sine wave, arrow down, we've broken into a downtrend here with the bars turning white. And this is the most important level for me, 6,850. So that gets broken to the downside. That's an important level. Continuation of the downside. So 15-minute chart, yes, is looking weak at this point, but we're going to trade up first before coming back down. We'll have to look at the 13,500 tip bar chart for that. So here we go, the last couple of weeks. So we had two signals in the last 2 weeks, but they didn't run very far. This one rolled over. We didn't have an exhaustion buy pattern into those highs, but we had blue professional bars, big pro bars taking profits here. We sold off and we ran into Rambo patterns and we bounced from there. Exhaustion sell, bullish divergence, a Rambo pattern here. Those are all the amateurs getting on board the move. Nope, they got wrong-footed. Rambo is potential reversal of an amateur breakout, and so we bounced from there. The professionals came back in, bought it up, bang, into exhaustion buy and bearish divergence, and there they are again taking profits, big pro bars at those highs, and we start to weaken. We get our signal, come back up, there we go, to short, amateur up bars, and at the moment we bounced off an exhaustion sell and blue professional bars coming at the lows there. So we're fussing around at the moment, but that 68.50 level is just sitting there, pretty important. So let us, I hate when TradeStation does this, we just lost our little indicator there to be able to get to the next window, but here we go, we can do it on the better sine wave chart here. You can see here we've got support in the highest time frame come in, and that's what we're bouncing off, and the bars are red at the moment. So we could easily trade back up through 6,900 and go make pullback to end of trend on this 13,500 tip bar chart. If we just lose it at 68.50, we'll just trade through those lows and then continue into a downtrend there on the 13,500 tip bar chart. So those are the two levels that I'm looking for. 69 to continue to break back up, or break through 68.50 and we continue on the way down. So Emini charts done. What about the rest of it? The rest of it this week, I think we could see a little bit of a risk-off type move. Here's the 10 years over the last couple of weeks. Remember the vertical, solid yellow lines at the beginnings and the end of the week. And a month ago or more, we had the blue professional bars coming at those lows. We had Fed this week. They lowered rates, but the market sold off. So with rates lower, normally you'd expect the bonds to rally, but they didn't. They fell out of bed. And we've come in with exhaustion sell and bullish divergence and big pro bars at the end of the week here, catching at that point there. The trailing of that stop will happen when the big pro bars are over. But it's interesting that we come into an area where we've previously had big pro bars and a rally. That rally stalled with exhaustion buy, bearish divergence, and it's come back into those types of level with exhaustion sell and bullish divergence. So 10 years could start to rally this week, which would be interesting. Japanese yen, similar type thing. A couple of weeks ago we had big pro bars into those lows, exhaustion buy getting the move going, stalled with Rambo patterns up here, and we weakened from there. And the only thing we're missing is exhaustion sell on the downside here. That's a shame. But we've had big pro bars come in down here. We've had a signal. Let's see if we get back up through 65.40, 65.50 there for Japanese yen. So that could be a reversal of the carry trade with rally in Japanese yen, weakness in equities, strength in the 10 years. Crude's had a nice rally over the last couple of weeks. We had exhaustion sell and bullish divergence. And there's the big pro bars come in here at that point there. Oops, they came in on that little bit of a dip, and then they continued to buy it back up. But they didn't take profits at the highs. We didn't have blue professional bars, big pro bars at those highs. We just had exhaustion buy. We've come back into that level where they broke out at that point, and the background's in red. So technically we're still in an uptrend on crude. So let's see if crude can continue through 61, 61.50 on the upside there, which isn't natural risk-off trade, but I have to wait and see. Natural gas, similar type thing. Exhaustion sell, bullish divergence, big pro bars coming at the lows, and there's our signal for a nice rally. So not classic taking profits here with blue professional up bars. They got out here and then got back in here, big pro bars there. Exhaustion sell, bullish divergence, the background's in red, so we're in an uptrend on natural gas as well, which is interesting. Euros come back down here to these lows. So we had a whole bunch of blue professional bars come in here. They weren't necessarily at the lows, they were at the highs here, at the lows. We got the move going. Exhaustion buy, bearish divergence, and then we rolled over. I was short most of this week on euro, got out at the end of the week when these big pro bars come in here at 1560. but this potentially, and again, no exhaustion sell at the lows, but a lot of blue professional bars come in there. So let's see if we get triggered into a long trade above 15.80.16 euro there, which would be, again, the euro's acting like a little bit of a carry currency. So we could have a risk-off reversal of the carry trade on the euro there. And the Aussie dollar weakening this week. So this week we came into those highs. Exhaustion buy, bearish divergence flush, big pro bars coming here at 66. We weakened. We've got a signal. We've got a retrace happening at the moment. Let's see if that continues down through 65.20 or so on the Aussie dollar. And that would be a risk-off type move. And lastly, gold and silver. Gold bottomed this week with exhaustion sell, a bullish divergence, pro bars coming in here. And then on the test, the big pro bars came in here, and we bounced from there. No blue professional bars taking profits at the highs. We've had Rambo patterns. We've just weakened from there. Got a little blue professional bar coming at the end of the week, and we're starting to strengthen. So let's see if we get a continuation of the uptrend in gold above 40.40 here, and a very similar pattern on silver. So this week's activity, we sold off. Blue professional bars coming at the lows, big pro bars here, exhaustion sell. We rally on the retrace, the big pro bars also come in here, hold it at 47, and all we've done is we weakened from Rambo patterns here. So backgrounds in red, we're still in an uptrend on silver. So a little bit of a mixed bag. It's not a classic risk-off collection, but let's see if we get 10 years, Japanese yen, a euro, all strengthening, and Aussie dollar weakening, and if we get continuations in precious metals, gold, silver, and the energy complex with crude and natural gas. So there we go. That's what I'm seeing on my charts this week. Good luck with your trading next week.